Welcome, everybody, to the Tuesday edition of the Not Your Average Investor Show. Today, we're talking to Jeff, who's a busy guy that's found a way to get to 10 plus properties and save over one entire month's rent in property management fees. We're going to talk to him about the hardest hurdle of internal selling to your spouse to invest. And we're going to talk to him about the way that he trusts but verifies his investments when living in the Northeast and investing in Florida. Eyebrows say that it is officially time to go live on Facebook for the Tuesday edition of the Not Your Average Investor Show. Welcome, everybody. I'm your host, Pablo Gonzalez. With me, as always, the man that they call GC because of his genius concepts, because he generates cash flows, and because he's a great co-host, plus because his name's Greg Cohen. Say hello, Greg.
Hello, everybody. Hey, I am here in living color after getting pied in the face by my loving teammates. For all of you who are on the Facebook group and are asking about it in the chat here, yes, I survived, and there were some forceful pies that were put in my face and my business partner's face and some of the leadership team here. So, but we're here and we're super excited to be with you.
He is here, and with us is the star of the show today, Jeff, who is joining us from Maryland, who's a busy guy, full-time job, has doing big things, but he's found time and he's found the ability to invest in enough properties that he's reached scale and is saving over 1 month's rent in property management fees already. He's going to describe to us everything that's going on. We're going to get to pick his brain. Jeff, welcome to the show.
Thanks for having me. Appreciate it.
It is great to have you, and it is great to have the Not Your Average Investor Familia here with us. We see Jen Filzen is in the house, Lee Bishop is in the house, Carl Thompson, Mark Larrett, Mike Foster, Bill Shields. Happy Taco Tuesday to you, my friend. Leo from California, so he's in the morning hours right now. Welcome, Leo. Dean Curry from Columbus, Ohio, former resident of Urban Meyer. I see what you're doing there, Dean. And who else? We got Nadeem in the house as well. Good to see you, Nadeem. Good to see you, Greg Stone. We got the family is in the house, and it's obvious because they know that this is an interactive show. We want y'all asking questions. We want you contributing and talking to each other. And there is a couple of ways to do that. Number one is what you're seeing in the chat. Talk amongst yourselves, talk to us. We love the chat interaction. There's one key trick to the chat that all the regulars know about is that when you open that thing up, it's only defaulted to talk to the panelists. So if you want everybody else to see you, which I hope that you do, because there's a lot of shared knowledge in this chat, then you need to switch that box to panelists and attendees so that everybody else can see what you're saying. You can get some great opinions. Don't take it from us, take it from everybody else that shows up here every day and does business with JWB or doesn't do business with JWB, who was ever here. And second is, if you want a question asked on the show, the perfect place to put it is the Q&A box. So you open up the Q&A, it's a different little box that you open up. You put that there. The reason why that is because I will go cross-eyed trying to keep track of everything happening in the chat because it flies, and the Q&A just kind of sits there waiting for me to ask it. That way I can stay engaged in the conversation and provide as much value as possible. So finally, if you want to invest in rental income properties, if you want to get to 10 properties, you want to save money, you want to act on the stuff that Jeff is talking about with JWB, the easiest thing is go to chatwithjwb.com. Just in that link is a calendar. Hop on with the team, make it happen. It's a value aggregated process. So the first thing, it'll be all about you and your plan and how to move you forward before you even start talking about whether you're doing business with JWB. So I highly recommend it. Chatwithjwb.com. Without further ado, Jeff, I just had to spout out all that stuff, man. Now from here on out, it's about you, man. So you are a full-time, you're a busy man. You're living up in the close to the capital, doing some important stuff up there. You figured out a way to get into real estate. Can you tell us your story of what got you into real estate investing and how you're able to make it happen with a full-time job?
Sure. So I've been in information technology the last 20 years. And in this community here in the Beltway of DC, I have some friends that have some homes out at the beach, Ocean City, Maryland, mostly, in which they rent out properties week to week through Airbnb or through their own internal sites or VRBO, just to have that income coming in. And originally I was looking to go in with them as far as having mutual owners invest and manage that accordingly, but was tapped on the shoulder by a good friend, and we'll just say his name is Michael. He referred me to JWB. It was a little too promising initially when I first heard of the value, the team, especially passive income when you guys are down in Florida and I'm up here in Maryland. So did my research, asked a lot of questions, engaged obviously with Greg's team, with Mike Sexton from the start, walked me through the process and really just learn more and more about the process itself as far as just how can I work hard every day in technology. How can I have my money work for me so that when I do get off the hamster wheel here in the Beltway and want to retire, I'm able to live comfortably off the proceeds from the properties as we continue to pay them down and get those annual, high returns like you hear Greg on all these shows. As far as the returns is what's critical. But so I did a lot of research, talked to Mike Sexton, and we originally settled on a refurbished unit in a nicer area, and we've been getting great returns on that one. And then after that, I started looking at newer properties because I figured if it's new property, it's much more appealing. You have granite countertops, new kitchen, obviously the veneer floors. It just looks the aesthetics are very, very good for people, especially wanting to move into a newer home. And plus your repairs are very minimal, at least for the first 4 to 5 years. At least that's my calculations. The hardest part throughout this process was getting my wife on board. And that was the hardest, sell, if you will. But just walking her through the numbers, she is much more conservative than I am. She works in the government, as far as just putting on that kind of down payment to hit that 25% to get the better interest rate, especially at the rates the way they've been. She was ultra conservative. And then she also wanted to add on, just for comfort, obviously flood insurance and obviously hurricane insurance. That hurts the margins and the returns. But hey, if my wife is on board and she lets me buy a couple over the next couple of years, I'm good with that. So really, Michael introduced me to Jwb, conversations with Greg and his team, from Mike Sexton to Victoria to others. And now I have Ashley. I mean, they all have been unbelievable. Yesterday, I got just a single, quick email from Ashley saying, hey, your new property that you guys are closing on has got a commitment and they're moving in on the 27th of May. So that proactive collaboration is just so desired when I wasn't even expecting an email, and obviously I've been busy here in my regular job during the week.
Well, that's a really amazing story. So much of that is common, I would say, but so much of that's uncommon. So the common things to me that just jumped out to me, there's a lot of clients that we have in your line of work and also in the DC area. And the first reason that I would think that that's pretty common is because your housing prices up there are so high, right? And you're looking at values down here in Jacksonville that you can get, and you're saying, oh my goodness, is that a whole house or is that half a house,
Exactly.
right? I mean, so that really appeals to folks. But there aren't a lot of people that have done I would say, the due diligence and that understand the model and have taken action like you have. You started with us, I believe in 2018 was the first year of your
Correct.
purchases, right?
Correct.
And I was looking back at our client ROI report. I think you bought 3 in the first year, if I remember correctly.
Correct.
And all of a sudden you're up to 10 now, right? And we're on to number 11, I believe.
Correct.
I guess my question, and for those who might be thinking something similar, for you to go in the last 3 years to go to 10 properties, and for you to be in a position where you could have invested, I would imagine, earlier, but you didn't, right? What was it about this opportunity that made you go really strong into it, even though you and I haven't met each other before, right? I don't think you've actually been here in Jacksonville yet.
I have actually.
Oh, you did?
The tour, yeah. You guys were busy that day with the lunch when you guys serve everybody, but it was great to meet the whole team.
Well, that's incredible. What was it about this opportunity that made it jump out to you and say, all right, I'm going to go and talk to my wife, who I know is really conservative, and put it all out there and see if we can do something really great for our family? What was it specifically?
Yeah, I mean, you hit it on the head. I mean, the price points here in DC area, for $500,000, you might be able to get a condo. And then you got your monthly assessments for that condo. Even at the beach, it's anywhere from, 7 to 1.1. And the price points were so attractive to build the scale. So working in technology, obviously performance reviews, you get stock and you get some bonuses and all that. So I figure take some money off the table every so often, because stocks, the volatility of stocks, as we've seen over the last 2 years, really just, I said, let's put it in real estate and let's my uncle a few years ago did very well in real estate back in Chicago, and I learned a lot from him and asked him a lot of questions. Again, asking him more questions throughout the process as far as viability, returns, extra points here or there. How does that really make up those returns? But it was the price points really. Come in to buy a brand new home, roughly at that time was about two to 210, like the styles that I like, the 4-bedroom units, multi-generational families having from grandparents and parents there, maybe some children. The 4 bedrooms is what I really prefer. Was very appealing because not only the rents that we get from those larger ones, but just I would say somewhat easier of payment when you have different people working and contributing to that rent. So the risk of not paying rent was more minimal. So all of those were part of the calculation, but then really just working with the team and understanding more. So again, I would take some more money off the table from my traditional, rewards and then buy another home. And I figured if I could buy 3 a year to get to like 15 was my goal, and then start paying them down. I paid one off already just to have that income coming in, but just to get to that point where I could sit back, one day, and then if we do retire and we want to travel the world, we love to travel, we don't have children, figure sell a home and take some of that cash, and we can do that throughout the process as we sunset into our retirement. So price point was the biggest. It was so attractive compared to other markets, but then it was really your team as well to support the patience to walk us through step by step, and the repeated questions that we asked. I'm sure, Mike Sexton and Mike Stewart got a little sick of it, but just so reassuring and so comforting, walking us through the entire process on the front end for that first one.
Really wonderful to hear.
Yeah, that's great. That's great. So Jeff, so you had this process. You've been able to, you said you were going to do 3 a year, but you started 2 years ago. You're ahead of schedule and you've paid some down.
Correct.
Can you talk us through how you were able to get ahead of schedule, and maybe talk us through also this new kind of like level that you've unlocked now that you're at 10, and the benefit of that. So you're thinking on growing it so quickly, I guess it'd be my number one choice, and entertain me after that.
Yeah, I mean, it was simple. It was interest rates. I mean, with interest rates that have been so low, I figure, sell some more stock from the IT company that I work for, and put that into properties, because, for investment properties or secondary homes, the rates were like the 3.25, 3.5, which were unheard of years ago. That was really the accelerator that really made me jump in even faster. And then also it was hard for Greg and his team, but getting like newer properties, I kept calling Mike Stewart saying, what's coming out as far as, a ranch style, 3-4 bedroom, 2-car garage, what's in the pipe, because you guys are always limited on stock. And then that's a good thing. But really it was just the interest rates that got us there to accelerate that, to get to the point where we're at. The point that you make though, Pablo, was eye-opening, obviously, through his process as we were prepping for the show. But I didn't know after, I figured it was 10% was the normal management fee for the process. And when I got to that 5th one, I got a call from, I think back then was maybe Victoria, but if not Ashley. But she said, you qualify now for a 9% management fee once you hit that 5 property. And then running through those numbers through this exercise, you figure 1 point doesn't mean much. But when you're looking at those returns and, from a range of 8 to 12 a year, that 1 point really adds up. And then when we got to the 10th, and again, I didn't know this, we got to the 10th property, I got another call, hey, it goes down to 8%. And then the exercise I went through this weekend, listing the properties as far as the first 5, what I would get off annually, it was about an $800 cost savings. Again, doesn't sound like a lot, but that would pay a mortgage on one of my smaller units that Jwb has. So again, a free month of rent. Now you compound that to the properties that we have now with my wife and I, with 2% point or 2 points off, and it calculated over $3,300. And again, 2 points does not sound like a lot, but that's almost 3 months of rent for any one of the smaller properties or two of the larger properties that I have. So those points that you always talk about in these weekly shows mean so much, but people don't understand it or digest that as far as how applicable it is to them until I went through this exercise this past weekend.
That was a lot of fun. And so, and many people aren't even aware of what the Jwb Elite Program is, which is what Jeff's talking about here. And quite honestly, I don't think I do a good enough job of talking about it. We haven't really talked a lot about it on the Property of the Week shows or whatnot, but I think it's a great example of how when you work with specifically a property management company, your goals need to be aligned. It's just an example of how JWB's goals are aligned with Jeff. It's when any client is offered to do this, when any client gets to that fifth property, we automatically drop their rates from 10% monthly management fees to 9% monthly management fees. Jeff, it sounds like in your case, you didn't even know that was a part of the deal until after you had closed on the fifth property, right?
That's correct. That is correct. Like you said, you guys don't promote that much, which understandably why, but also that could be a selling point for you and your team as well.
There's a lot of things that we do that in our sales process that we want to keep these wins for people that you might not have necessarily you didn't expect. So we have a lot of those, throughout the process, because it all comes from this idea of these moments of truth when you're doing business with a new business. And you as a new client, you have these first moments. The first time you call that company, how did they treat you? Did they pick up the phone, right? The first time you buy something from them, was it better than you were expecting, and all these things. So we try to have these moments of truth. I'll share with you, Jeff, that's not one of the moments of truth though. we probably should be telling people more. I probably should be telling people more that this is a part of the plan. Right, this is a part of the plan with you. So when you get to 5, you drop from 10% to 9%, like Jeff was talking about. And in his portfolio, because we actually, he put the numbers together, we reviewed this prior to the call. I believe that's saved, and I've got the email here.
$3,311.
Yeah. So now that he got to 10 properties, you drop it again from 9% down to 8%. When he's saying 2 points there off, that's 2% per month per property for 10 properties. So annually, that saves him, just as Jeff mentioned, $3,311.28. And we love that. That's why our goals are aligned. JWB makes more money when Jeff makes more money. Obviously, we want him incentivized to continue to grow his portfolio, and we want to reduce our management fees as much as we can to allow him to do that, to increase those returns on investment.
Yeah, I mean, like I said, when I ran through that, it was eye-opening. I even had to, again, share that information with my wife. She's not into the numbers. She lets me run with the numbers, but it was impressive, and she was even really shocked. So again, it doesn't seem like a lot with that 1 point here and 1 point there, but like you always say on these shows about going through a cycle, as far as looking at your returns through a cycle, that 15 to 17 years, you got to add this in as well, because it is very impressive as far as, not only the returns, but if you want to put that towards extra principal to accelerate the payment down so that you're getting more cash flow, you can do that as well. So there's a lot of ways to work with that.
Sounds like you're providing the moments of delight and still kind of selling it to your wife, this whole rental property experience. And I want to dive into that, but I got a couple questions here from the audience that I would love to pop in. And first one is from me. You said that it was interest rates that made you do it. How'd you find out that it was what was happening with interest rates, and how'd you come to the decision that this interest rate moment was such a crucial moment for you to change your plan, take money out of the stock market and put it in real estate?
Well, that's a great question when it comes to that. I mean, I was working with, again, Greg's team. I mean, Ashley, with the lenders that they have, one I use for all of my properties. They even reinvested or refinanced my primary residence here in the DC area, and went with that same bank because the low fees that they charge up front, as far as the ease of management with their website. You guys obviously upgraded to your Salesforce, and as far as some of the tools and reports, those metrics and visuals, I mean, in the IT industry where I work, those are so critical from like an executive dashboard. And if it takes me 5 minutes just to run a report per month and I get my checks on the 28th, but the proactive conversations about interest rates are low, Jeff, we have these properties that are coming up to be released to the market. That was really the main decision as far as, again, I put the numbers on a piece of paper for my wife and walked them through. If we, if it's 3.5, if we pay a point, it's 3.25. So part of that really is just more for educational for me, but also my wife, just to make sure we're making sound investments with the great team that Greg has with all of his staff.
And Jeff, I wanted to give you some real information of your interest rates. I'm looking at your client ROI report here, and it's amazing to see the decisions that you made that are so sound as far as investing early in a market where interest rates are going down and we do expect home prices to be going up. So your first property purchases in 2018, you had either a 5.25% interest rate or a 5.5% interest rate. And people forget now because we are here and, it's the pandemic and it's occupying our time and we only see what's here and now. But like a 5.25% and a 5.5% interest rate were incredible. Jeff, when you bought your first 3 properties, did you think 5.5% was too high of an interest rate to pay?
No, I thought it was great at the time.
Yeah, that's, when I first was buying my properties back 15 years ago, my interest rates were 7.5%. And I thought those were good because I was talking to my parents who had interest rates at 15 and 18%, when they bought a house, 20 years before that. But let me just kind of go through the line here because it's so fun to see. So it was 5.5%. Then your next property was 4.25%. Your next property was 4%. Your next property was 4%. The next one was 3.63%. The next one was 3.13%. Another 3.13, and the last one that you closed on was 3% flat.
Right.
Like, that is strategy coming together with a team, obviously, that's supporting you. But there's an incredible amount of, I'm just impressed with your ability to see the opportunity to do something about it. Because,
exactly.
People think about this opportunity to buy rental properties as, well, I'm just going to buy as many as I can or whatnot. It sounds to me like you've had a very clear picture. You mentioned getting to 15. And when we take that same pile of money that you have sort of reserved to being in this asset class, and we can engineer it in a way where you can get lower interest rates and benefit more from home price appreciation, that can have an impact in the millions of dollars on your portfolio, depending on how long you hold on to it.
Exactly. And I think, since those first initial ones, obviously refinance those would stifle, but, it's really sitting down with your team and going through on the front end, what's the strategy? Yeah, everybody wants to buy properties and everybody thinks a couple $100 over their mortgage, that's profitable. But then obviously starting up your LLC and then the tax advantages to that, working with your accountant, there's a lot of benefits to that. But if there's no sound strategy laid out as far as where do you want to be in 5 years, 10 years, 15 years, and now with some of the charts that you guys provide in your new tools, I mean, it's spot on as far as seeing some of those metrics, but also seeing a trend or some of the analytics as far as when to, make these purchases to benefit. Yes, the rates are starting to go up, but like you said, rents are starting to go up as well because Jacksonville is a much more desired area to move with all the marketing information you're sending out to clients. But it's only going to continue to grow as far as the population, but then also the rents hopefully will continue to grow with all of these companies moving into the area as well.
Yeah, totally agree. And the not your average investor show bump helps a lot, I've heard, in the economic
Absolutely.
development of Jacksonville. Putting some good lipstick on a beautiful lady here. All right. So Lee Bishop has a question. Jeff, are you saying JWB expenses are low for the first 5 years on new homes or the refurbished homes? Did you have an experience on your new versus refurbished on like expenses early on? Has it been kind of similar?
Yeah, for clarity, I have one refurbished home. That was my first property. And then the rest have all been new construction. And the reason why I look at that is new HVAC systems, new flooring, as far as new appliances, new countertops, the appealing to get somebody into those quickly, as well as just, if most of those are under warranty, as far as like the new air conditioner unit or the heating unit or the hot water heater. Yes, refurb, you guys go through that process when you refurbish a home, but the percentages are obviously higher of new equipment will have a less failure rate compared to maybe they didn't replace the hot water heater, which could have caused a leak. And then obviously that could be more damage on a refurbished unit. So my methodology was more about focus on a new, yes, in 5 or 6 years, there'll be the curve will start curving up for repairs, but the first, 4 to 5 years, the repair cost should be very minimal.
And have you experienced a higher level of maintenance in the refurbished unit versus your other ones, or?
Yeah, we had a little during the turn, we had a little bit of some repairs, but as far as the other new construction units, I only had one issue. A neighbor's tree fell on it. And my property manager said, hey, it'd be better just pay out of pocket than filing a claim because your insurance will go up. So again, that kind of proactive coaching and mentoring, as far as Greg, your team knowing Jacksonville, your team knowing, as far as insurance and how to work the numbers to benefit your clients, it's spot on every time, every time.
Nice. We have a question here from somebody here that's from France. Anonymous Attendee asks, can current and future resident clients do a visit of Jacksonville and JWB? How do you schedule it? Is it something JWB offers to clients? Jeff, maybe you want to talk about your experience, and then Greg, you can clarify on what it is.
So I'll let Greg, share most of it, but my wife and I did go down. We've been down a couple times because I really like to see the neighborhoods and the properties themselves, just so I have a visual of what we have as far as assets. But yeah, we went down there, met the entire team from our property manager to Mike Sexton and Mike Stewart. We toured the city to get a better understanding of what they call the Beltway compared to the Beltway that I live here in Washington, D.C., north side, west side, Arlington, again, just to have that visual compared to just looking at Google Maps. And, they treated us all to lunch, very professional, very outgoing. It was just, again, you really like doing business with people who you know and who you trust, and having that name face recognition instead of just via email means so much as far as that long-term relationship.
Yeah, I mean, you hit the nail right in the head. I mean, even as you were describing, the Beltway and north in the neighborhoods and the lunch that we put on for everybody, that you did a great job explaining that. We love hosting clients. It's part of our DNA. We love, especially for those who, this might be the first time they're investing in rental properties, the first time they're coming to Jacksonville. It's important. So we love that. It's COVID time, so we've had to make some changes, as everybody has. So as of right now, the office is closed. We're not able to host those tours right now. It's closed to outside visitors. So at some point, we expect that to open again soon, and we'll be able to do those tours. The one thing I would make mention is that it's important for clients who are coming on board with JWB to be fully prepared to be able to make a decision on a property over the phone with the help of our resources, to do it through a Zoom meeting or what have you there. Doing it over the phone before you get to one of these tours is really important. It's important because that's how your decisions are going to be made long-term in this asset class. It's meant to be passive. You're meant to kind of, trust a team to be able to guide you there like Jeff has. So that's really kind of how it's built. We work with clients over a series of phone calls, make sure that they're fully prepared to be able to make a decision on a property. They put the properties under contract. And at that point, we then would invite you onto a tour, and you'd be able to come down. If you wanted to come down before closing, you can. If you want to come down after closing, that's certainly okay with us as well. And in non-COVID times, those tours will be up and running again. It's just a really awesome experience to get to meet people and shake their hands.
Greg, let me add on to that because you're spot on with that. Through websites, from Google Maps to look at the neighborhood as far as what kind of neighborhood was our first unit in, looking at FEMA flood plans, looking at just everything, retail around there, school districts. You're right. You got to make that decision over the phone. And we didn't go down until probably 4 months later. It's usually like the last Thursday or last Thursday or Friday of the month. But we bought the house, and then we finally decided to come down there. But you're right. Make the decision, pull the trigger. The team is giving you all the information. It's a I wouldn't say a simple process, but you guys make it as simple as it possibly can, because there's a lot of anomalies with the lenders and the appraisers that you guys can't control. But right, like you said, pull the trigger, because inventory is scarce and demand right now, with interest rates still fairly low in the marketplace, it's a great time to get engaged and buy in.
Yeah, there's a way to do it as a new client to come on board where you feel fully prepared. Listen, most people don't make decisions on buying houses over the phone. It's a new thing. But if you go slow, like we do, and you surround yourself with the right resources, right? We actually build that buying plan out like we did with Jeff. We do that before you go under contract with us. We talk through all the what if scenarios, so we go really slow with bringing clients on board. And we feel like that's that happy medium where we know we're asking to do something that's a little bit unique. And we know we're asking you to make a little bit of a leap of faith, but you're going to go through that slow, methodical process until you get to that point. And then you get to reinforce it with hopefully a trip to come down and to meet the team.
There you go. And you kind of talked a little bit about location and whatnot, Jeff. But Miguel Angel Sanudo has a question here that says, Jeff, did you care about the size of the home, the location, the price? What were you really looking at? I know on the show we kind of preach widgets, right? But
Right.
what was your widget acquisition? Kind of like, what were your parameters?
Yeah, I know that my strategy is, well, our strategy, my wife and I, our strategy really is more of a ranch style home where it's a concrete slab. I know you guys are getting into townhomes and all that, but the way I look at that, a lot of wear and tear on the carpet, steps, possible injury and all that as far as insurance claims. For me, it's just more if I can have a flat, concrete pad where the veneer is going to last for years. If it gets scratched up a little bit, that's fine, but it's waterproof. And it's like the 3 or 4 bedroom unit. Obviously, having a 2-car garage is what I desire, but I do have 1 or 2 units that have a 1-car garage. Again, how do you get more people into these properties where they're making income to make that monthly rent? And I've been very fortunate with your team, Greg, through COVID, where I did not have one missed rent throughout the process. So I've been blessed with that. But again, I think it's a partnership as far as constant collaboration, inquiries, and then you're working with your property managers like, okay, this year I got 3 renewals coming up. What are we going to do? What's the cost for if they sign a 2-year lease, a 3-year lease? So understanding the costs and just planning for that as a potential, loss of income for a couple of months. If they just do decide to move out, you will have some repairs as well as obviously the cost for getting somebody in. So part of that all has to go into your equation as far as profitability and just running the numbers. Sunday nights is my usual thing as far as getting that spreadsheet together and trying to figure out your stats versus my stats and see how accurate they are.
And John Tennyson has a question. I'm not sure if I understand it well, but the question written here is there a maximum or minimum dollar investment that is considered when investing in new construction to making renting property? I don't know if John, you maybe you can clarify, but when I hear that, I think, what you're putting in versus what you're getting out and how you're thinking it as an investor, Jeff, of going into the new construction, which has a higher price point, but is profitable versus a lower price point with profitability. How do you consider that stuff?
Yeah, for me, the ease for me was just, again, buying something new. The desire for a renter going into a brand new home that has granite countertops and a nice, it's so appealing with these new appliances compared to where they have lived there. And I'm thinking as far as they sign a 2 or 3 year lease, they're probably going to want to stay there because it's a newer property compared to going into a refurbish. And I don't want to, obviously kill your refurb business at all, but that was just my methodology with my wife as far as, when we built a home, everything was brand new from the paint to the crown, the molding on the floor to, that nice flash, bright white trim on the doors and everything else. So I put my through the lens of a possible renter as far as, do I want to go into a home that may have some newer upgrades, but is a little bit older, some creaks in the floor, versus being brand new and have everything fresh, to start with. So for me, for our strategy, it's always been going after the newer ones. The reason why we bought the refurb one in the first unit was because of the neighborhood. I mean, that was a unique one because you guys don't have a lot of units in that section of Jacksonville.
Mm-hmm.
And just the appreciation on that one. I mean, Mike Sexton was spot on. He said, Jeff, you'll make a mistake if you don't buy this one because the return is going to be unbelievable.
Well, there you go. When we're talking about new construction and renovations or refurbished homes, Jeff, the reality is you're not alone. I mean, people have a penchant for going to new construction. I mean, it's just in people's minds. It is there is more peace of mind knowing it's absolutely brand new. And for JWB, I have the benefit of seeing the numbers on over 2,000 properties month after month, seeing maintenance costs, vacancy costs. I also have the benefit of investing for 15 years in my own portfolio, of which I have more renovations than I have new construction in my own portfolio. And so what I've seen is that the numbers tell a story where they both can really perform well. I'm not in a place where I say all new construction all the time or all renovations. I let the inventory opportunity at that moment dictate, and then I'm going to see what's the best return on investment. And the cool thing is that renovated properties and new construction properties get you to that same 7 to 9% return, and they have the same prospects long term for home price appreciation. So that's, that's how I look at it. That's what the numbers would dictate. But you know what? When a client really loves new construction, if new construction is available, I'm not going to stand in your way, right? And it sounds like that's really kind of where we've landed with you, Jeff. And that's really common. I mean, new construction rental properties is this incredible opportunity that really nobody thought they would have the opportunity to do. You know, when I was renting properties myself, I never thought of moving into a brand new home. So, it's there. We have more new construction available today than we did in the past, which is really exciting. But if you are thinking about renovations, don't discount it, right? We can walk through the numbers and you're going to see that, while you might have slightly higher maintenance costs, that's built into the expectation. And, at the end of the day, you can still produce really high returns.
I think right now it's probably more appealing, especially a first time buyer, because the unit that I'm closing on next month is the same unit that I bought, the second unit, the same floor plan. The price point has gone up tremendously. So those refurb units are obviously renovated units. The entry point might be better, and just you can buy multiple that way quicker if that's your strategy as well too. So again, I'm not discounting those at all, because if the numbers work, the numbers work. It all depends what your long-term strategy is.
I mean, that's the reality right now. In this environment, we've been talking about it for so long. Inventory is so scarce. Most people, when they want to go and buy a rental property, they have to wait 6 months, 9 months, a year on a waiting list, So, that's just not the case here. So if it's new construction, if it's renovation, we're going to sit down with you and decide what the right thing to do is.
Right.
And Jeff, I'm super happy that you have almost all new construction, because it helps you guys sleep better at night, which at the end of the day, if we can produce your returns on investment and you're smiling, you're sleeping better at night, that's awesome.
Exactly. As long as she's sleeping at night.
There you go.
Perfect segue, Jeff. If I had a friend who's trying to talk to their significant other about getting into rental property investing, how would you advise, approaching that conversation, that education piece, the building consensus as a couple is very, very important in these kinds of decisions. What kind of knowledge would you have to share with my friend over here that would love to talk to his or her wife about it?
Yeah, I can only share what I did based on my wife's personality, but really, like Greg said, as far as walking through, and it could take some time as far as that first purchase, I simplified it even more, just as far as the 3 tabs that you give on one of those analysis sheets. We've been doing the traditional financing. We learned about, accidentally don't put both names on the title as well as the property and the loan if you're going to go after multiple properties, because each one can max 10 properties before you get into hard lending. So we learned that, like on number 4 or 5, and we refinance those into individual names. But what we did was I walked through the numbers and I really tried to simplify what's going to be the cost based on the estimates you guys always give for rent are usually spot on. And then just walking through the spreadsheet that you guys provide, and then simplifying that even more. If we were to pay a point on the loan, and what would that be? If we want to make $150 a month, or maybe 186, what's that 36 going to break even point? Is it going to be 4 years, 3 years? So for me, it was just walking through the numbers to let her see, so that she has some ownership in the decision-making process, where I'm just extra transparency at that point is always better. But that really worked well for me, just again, to get her buy-in. And after the first or second one, she was just like, okay, continue on. And she trusted me with that. But that's how it would work. May not work for everybody, but even in business, I'm all about transparency and honesty and always being direct, because life is short. And if you're not clear with your intentions and goals for investing with JWB, or working with a customer of yours, you'll that trust will dissolve quickly, and you won't have a good relationship at all.
Jeff, just curious, was your wife on the calls during the onboarding process in the beginning, or were those conversations you had offline?
Mostly it was just me, and simplifying them for her.
Yeah, and both approaches can work,
Yeah.
but I think there's just that transparency, like this just can't be, hey, honey, I got a great idea of how I'm going to spend the money. The numbers have to work. And I think that exercise of, you then, explaining it to her really helps you make that decision as well, right? Like
Right.
now it, you've taught it, well, now you thoroughly understand it. So I'm sure that's a part of her master plan too. I'm sure how she helps you be your best self.
Yeah, exactly.
That's great. Greg, do you find, is that a common kind of thing? Is that a common, I guess, internal struggle when clients are looking to invest? Is there always kind of like a decision maker and then a decision maker A that needs to get involved on the back end?
No, I wouldn't say it's more common or uncommon, right? We're here to help with both. For some family structures, it's better to go in a route where both of the family members are on the call together, so they both get the feel of working with our team, and that's really important. And some family structures are better suited for what Jeff is describing. And either one is really, we're going to be here to help. We're going to provide with the resources. And I just think it's important when we understand that there's multiple people who might not be on the phone call with us or the series of phone calls. We're going to go way out of our way to make sure that before we would ever get to that point of choosing properties, everybody's on board, right? We're going to fully investigate this, because what we don't want to happen is for the other person not to be completely supportive, because that'll manifest itself in some way, shape, or form down the line, right? It could be 1 year after owning the property and you have one maintenance item that comes up and the other person says, oh, geez, I told you that was going to be a terrible investment, right? So, we really try to take the time going slow in the beginning. If there's multiple decision makers and, they can't be on the phone for one reason or another, that we're going to try to make sure we have as much, I guess we just want to have as much transparency and really create a supportive dynamic rather than one that we're moving forward without the full support of the other person.
That was key, Greg. I mean, the transparency, but also it's a long-term relationship. Jennifer on the notes said she had the same thing she had to do with her husband, and then also her parents too, because they bought in. And I mentioned Michael before, as far as he gave me all the spreadsheet, him and his wife walked us through it for some confidence, that trust but verify. And then also, Constantine, another friend of mine who's been working with you lately, I've been pitching him, the Jwb offers, as far as ways to invest, and as well as a couple other friends here. And I keep saying to them, I've given them the PDFs as far as what's going on in Jacksonville. I saw the Redfin, Jacksonville prices have gone up at 22% in the last year. Now with, who is it that's moving to Jackson?
Dun and Bradstreet.
Dun and Bradstreet. But it's like some of my friends, I said, hey, if you want to schedule time with you and your, like this one woman I'm talking to, you and your husband to walk through, my wife and I will get on a Zoom call because we had the same concerns.
Yeah.
We'll walk you through, we'll answer any questions, and then turn it over to Jwb because they know the current market, they know, what interest rates are. So part of that, I love to learn from others, but also I want to see people prosper as well. So, it's always paying forward. If I could take something that I've learned and share that with somebody else, as far as if it's part of their strategy, I love to just learn from people because everyone's got a different strategy or style or approach as far as what their goals are. And if I can learn a little bit from them too, it's a win-win for everybody.
That's the quality of clients that we get blessed to work with every single day, right? Jeff, know you're a busy guy, but for you to care so much about, Jwb and to care about your friends so that you're willing to take your time, in essence, have the first introductory sales call right off the bat. I mean, it's really, really special, and that's not uncommon. We have a lot of clients that refer. I'm sure Michael probably did a similar thing with you when he was referring you. So there's really kind of a lineage here. And then the other thing that just popped in my head as we were talking is that's really what this show can become for people as well. If you're thinking about this for yourself and your spouse may or may not be aware of what's going on, really tuning into the show on Tuesday or on Thursday and hearing stories like this can be a great opportunity to get people more initiated into what this can be before you spend time and get on that scary phone call of actually talking to Jwb for the first time.
It's one thing I want to be clear is, when I first got the email about working with you as far as like today, I was like, really, one, being a real client and just having the prep as well as just the messaging, because there are so many concerns that people have. And there's people that have disbelief as well, as far as, paid actors or paid clients, but I'm not paid. Well, I'm being paid in different ways on the 28th as far as the returns, but it's been a great experience. I mean, unfortunately, I only found you guys like 4 years ago. I wish I would have found you a lot sooner, but it's been a great experience. I mentioned names before the call as far as key members of your team, Greg, so make sure they don't leave. But it's been a great experience with your whole team. Just very down to earth, simple people that want to see people, be super successful in their journey of investing.
Thanks, Jeff. I got to tell you, to think about this, what we started 15 years ago, and to think about impacting somebody's life like yourself, I can already tell, just by us working together, that this isn't how every client relationship goes for you. Meaning, like, this is a special one, right? There are some companies that I can tell. Obviously, you're a busy guy, you're a successful guy, and you know what a really great client relationship looks like versus one that doesn't fit the bill. So I'm excited that we're able to have this impact for you guys. I just appreciate you.
No, likewise, we appreciate you guys as well.
This is a heck of a love fest, guys. I don't want to interrupt here, but Jeff, we in your onboarding call, we talked about you got this network of friends that are real estate investors, and you referred Jwb and whatnot, and I think it's really, really cool. I would love to just pick your brain on what you're interested in these days. What other asset classes are you thinking about? You said you wanted to talk about downtown Jackson. Let's open it up to you. Is there any questions you want to ask Greg? Or
Yeah.
you want to ask?
I'll put you on the spot, Greg. I mean, obviously, residential properties are nice, with commercial properties becoming available, and you and Alex putting out a lot of press as far as the investments you're making downtown. I mean, even from the containers, it's been impressive as far as just the results and the feedback. But like some of the commercial properties, is that going to be a potential asset that you guys are going to offer to clients in the future, or is that still TBD?
It's really not in the plans right now. We get a lot of press right now for the commercial properties, but that commercial property part of JWB is really a small, very small segment of what we do, right? We, if you read the book Good to Great from Jim Collins, he talks about great companies have what's called a hedgehog, which is the thing that they are built to do, which is the same thing they do over and over and over again, and they work to perfect that craft. And for us, that is selling turnkey rental properties and performing property management services. And the interesting thing is that we've always had a small bucket of opportunistic things that we have done. If you go back 10 years ago, it was new construction. Right, that was a big leap. Nobody else in the country was building new construction homes to sell as turnkey and investment properties. And so then that was a leap, and that's worked out really well. So that was that opportunistic part. Townhomes is another part of our business that was something people weren't doing, 7 years ago. And we built that out, and now it's a part of the business. The commercial properties they are definitely opportunistic for us, but they serve the hedgehog. They serve the turnkey clients, right? Because at the core of it, what we're trying to do is to make sure that we're not just solving the problems for today in turnkey properties, we're trying to solve the problems for tomorrow, right? And as we think about, as us trying to produce the best risk-adjusted returns for clients, just like you, Jeff, where you own properties, right? And South Side and West Side and North Side and Arlington. These are 4 neighborhoods that surround downtown. Well, one problem that is coming next, that's not a problem today, but what's coming next is how do we raise median incomes as a city? Because if you have rising home prices, but median incomes don't rise, then ultimately your return on investment is capped because home values will not continue to go up because people can't pay for it. So the commercial part of this, there's really 2 components to it. It was done because it does serve the hedgehog. It is a way for us to have an impact on driving what we see as better jobs and better talent to downtown Jacksonville. And when we do that, that's going to be a significant driver in rising rents and rising incomes in downtown. And when you do that, then as home prices continue to go up over the long haul, over the next 10 years, 20 years, you'll see incomes rising. And when that happens, everybody's return on investment can be maximized. So that really is a big part of it. Another part of it is we feel like we have this once in a lifetime opportunity to make an impact on downtown Jacksonville. And that means something to my business partners and I. We've seen other downtowns, and we've seen how, Austin has changed from what it used to be to this thriving urban walkable downtown. And it's everybody talks about Austin and,
Right.
and Charlotte and Denver and Nashville. And we think that's the trajectory for Jacksonville. And we just said, listen, we have a platform now. We're never going to have another opportunity to go and buy 5 buildings downtown in a small section of a city like this. So there's that kind of once in a lifetime opportunity that's a part of it. But to answer your original question, it's not done with the intent to market and sell these properties down the road. These are incredibly risky projects. That's why we only do a small section of our business is focused on this. And I wouldn't feel right asking another investor come alongside us right now, because the dollars are huge on these. The risk is huge. We're taking buildings that some have been vacant for 30 years and have literally forests growing inside the buildings. And we're going to turn this into a wonderful mixed use project. So it's not the intention to be able to market those and to sell those as assets. It's really more about investing in the hedgehog and then making an impact in downtown.
No, that's great to hear. I think, part of that regentrification as far as taking on and investing in Jacksonville, like you always say, you're not going to go to any other city. I think some clients need to hear that, because how you guys are thinking long term. Not only that, but also the investment from the Jaguars owner with that whole hotel and like city plex that they're building alongside that too. So keep sharing that with current as well as future clients, because I think if they understand that journey as well as your vision with you and your partners, it makes things easier for engaging potential new clients as well.
Absolutely. We'll continue to do that for sure. It's great to hear. Great feedback.
Anything else, Jeff? What draws you to that commercial investment? Were you looking to see about the financial stability? Or are you just curious about returns on commercial investment? Anything else that Greg can
Just
answer?
diversification. I mean, one of the things, like I mentioned before about my wife's the concern about the hurricane coming through, which is why we have hurricane insurance and flood insurance as far as that's eating into the profits. But just again, more diversification as far as what can we do with potential different assets, with my stock and my 401k versus rental properties, and as far as what else is out there that, again, what can I learn from trusting the folks at Jwb, where I don't have to do all the research myself because I am busy learning that kind of class investments.
Yeah, and there's a couple of different ways to invest with Jwb. This is the same thing that I do with my own personal investment portfolio. I own a large number of rental properties, but I also do private lending. And private lending is another way to diversify within real estate. A lot of people will say, well, you should diversify, you should have different assets. And I think that's really wonderful. But what I do with my own money is I have an incredible team here at Jwb. I have a lot of market knowledge here in real estate in Jacksonville. And so I look for ways to diversify within real estate.
Mhm.
And so, rental properties is one way. Private lending is one where you can actually become a lender for a company like Jwb to be able to do projects. Or another company out there. Private lending is something you may want to look into. It's a really wonderful way where, in essence, you become the bank and you can earn a really high return on your investment. You can earn a high interest rate by lending your money out. So, and that's what a lot of current clients do, actually. For Jwb, you do have to have an existing relationship with us to be a private lender. So it works perfectly for current turnkey clients who then want to diversify into becoming private lenders. And so that might be another opportunity for you there.
Absolutely. I'll definitely reach out to Ashley and inquire.
Awesome. Great combo, guys. I got a couple quick hitter Q&A things. They're not as relevant to Jeff, but Greg, now that we're on here, we can answer a couple quick questions if you're up for it, man.
Love it, man.
Anonymous Tende asks again, can you please share maintenance percentage for new versus refurb houses for like a 15-20 year period?
Yes, absolutely. So this is a part of every property evaluation. If you want to see what it actually looks like on a property evaluation beyond my explanation here, you can go to jwbinventory.com. That's where we host all of our properties of the week, and you can actually download the evaluation and just substantiate what I'm going to share with you here. So that's jwbinventory.com. But basically what we have done over the last, since 2011, so 10 years now, we have tracked every dollar in and every dollar out of maintenance. And we've tracked it across our entire portfolio of renovated homes, of new construction homes. We've been able to see that. And so what we've been able to see, the numbers tell us what you should expect long-term for your maintenance costs as well. For a new construction home, it's going to be slightly less than a renovated home, just like Jeff was talking about. So for a new construction home, you should expect 4% for your maintenance cost per year. And that's 4% of the gross rents that are collected. So you take the rents on a monthly basis, you multiply it times 12, multiply that times 4%. And that's how much money you should be expected to pay each year over time in maintenance costs. For a renovated property, the number is different. It's slightly more. So 6% for a renovated home that's on sewer, and 9% for a renovated home that is on septic. Now, this is really good information to have, to know when you're going in that you're going to have slightly higher maintenance costs for a renovated home. And if it's a renovated home that's on a septic tank, it's even going to be a little bit higher. Because what happens is, in order for us to make the numbers work for you, to make the returns on investment basically the same, whether it's a new construction home or a renovated home on septic, if you're going in with a 9% expectation on maintenance costs, that means that you have to get a better deal somewhere else in order for the returns on investment to be equal to that new construction home. Maybe the purchase price is lower. Maybe the rent is higher. Maybe the property taxes are lower or whatever. But at the end of the day, whether it's a new construction home or a renovated home or a renovated home on a septic tank, we take into account those extra expenses for the renovated homes. We build that into your property evaluation. And no matter what type of asset, you're going to see between 7 to 9% expected returns, which at the end of the day is why I love them all. I love them all. I look at the returns on investment, and that's how we get there.
There you go. And Mike Foster has actually, this is a question by Tommy in the chat that Mike Foster was kind enough to put in the Q&A. Thanks, Mike. I really appreciate it, man. He says, Tommy in the chat asked whether JWB has any guarantees on the AC and or roofs for refurbished houses. For example, if like the week after a purchase, something expensive died, like an AC appliance or a roof or whatever, would the client pay all of that or, that piece of that expense?
Well, the guarantee word is one that makes me shudder. So there are no guarantees in any rental property investment, right? We don't guarantee that rents are coming in or anything like that. At the end of the day, you need to be prepared as an investor and to know the rewards as well as the risks. So you're never going to hear me guarantee anything. I think what he's asking about more is warranties, right? And when you have a renovated home, you do have warranties that come in place. And this is all disclosed with you before you put the property under contract. And the warranties are with the contractors. And so it will differ depending on the type of work. So like an AC warranty is going to be different than a roof warranty. Generally speaking, it's about 1 year, sometimes a little bit longer, but usually 1 year depending on what type of trade it is. Roof warranties are longer, but typically about 1 year. And the same thing on the new construction side. New construction is a warranty from the builder, and it's generally about 1 year as well.
All right. Two quick more questions and we'll get out of here. Lee Bishop asks, what are the minimums for the JWB investment path? I imagine he's talking about private lending minimums versus homes.
Yes. So for private lending, if you have an existing relationship with JWB, the minimum as a private lender is $50,000.
Okay. There you go. And Nadeem asks, does the JWB still do townhouses, and do townhouses have more expenses like HOA dues?
Great question. We do have townhouses. They tend to come, in packs. You might, if you're working with a member of the JWB team right now and you're looking at inventory, there's sometimes that you won't see townhouses for maybe a couple of months. And then as we build out those townhouse units, we might have 2 buildings that might have 4 or 6 units in between them. And so townhomes might become an option for you. Townhouses are evaluated the same way as the rest of our brand new construction homes or renovated homes. They're still going to get to that same 7 to 9% return on investment. Now, the reason that people love townhomes is because usually purchase prices are lower than your other single family new construction homes, but they are new construction most of the time. So it's a way to get into new construction at a lower price point, and your returns on investment, again, are that 7 to 9% return.
All right. Full hour. Jeff, you hung out with us, man. You're a busy man. You added a ton of value here. This was really, really a great conversation. I think your viewpoint, your experience, kind of like your honest take on the stuff and your advice was really, really invaluable. Getting a bunch of comments about that. And, really, really appreciate you spending this time with us, man.
I appreciate the time, especially getting to know you guys and Greg, your team. Again, I can't say enough about your team and the services that they provide. So my wife's not home. She's out at the beach with her mom this weekend. So she says thank you as well.
Is she going to watch the show?
She might. I'll download it and share it with her.
Well, I hope so. And Jeff, this has just been such a fun experience bringing you on as a client and seeing, your vision really become crystallized, and to see you, jump with 2 feet in once it made sense. Personally, I feel like, there's nothing more gratifying than when able to share kind of the thought strategy about how to make somebody else's rental property portfolio successful. And they put their trust in my team and in me, and they follow through and they make it happen. And then we get to have an experience like this where you get to say all these really nice things and hopefully help others out there who may have been having the same question. So it just means a lot to me. I just wanted to say thanks again.
Thank you. Thanks for the time. Appreciate it.
Yeah, man, this was a great experience. A lot of nice things exchanged. Thank you so much to everybody that joined the call, right? Like we still have 42 people an hour later. That's a testament to the value you're putting out there, Jeff and Greg. And it never, never falls mute upon us that you're taking an hour out of a weekday to hang out with us. So really, really appreciate the great questions on the show, the great participation. Thursday, Greg is pursuing his PGA golf cart, so he's not going to join us. So we're not doing a property of the week. We're doing a rental investor of the week.
Week.
There you go. And Lee Bishop is coming back on the show. So Lee, if you've ever tuned into the Not Your Average Investor show, you've heard Lee's name. He's the MVP of the show. And, he bought a bunch of properties a while back, and he's back in it again, right? With these rising prices and changing dynamics, he's still buying. So we're going to get into his mindset of the properties that he's currently looking at right now, break that down from a transparent standpoint. You're not going to have Greg to, put whatever JWB spin you think he likes to put on stuff. So it's just going to be me and Lee hanging out. So we invite you all to join us, and we invite you all to join us in the Facebook group. Go to jwbfacebookgroup.com. That's where we hang out throughout the week. We're trying to get to 2,000 members 3,000 members, and we are almost at 2,800. So if you have a friend that likes rental property investment, like Jeff, right? Like if you're trying to, I'm not talking to you, but I'm just saying how you refer people to JWB. But if you're having a hard time convincing them on why it's great, if you want your friends to start accruing some passive income with you, invite them into the group. It's the easiest thing. They'll get a ton of value in there. jwbfacebookgroup.com. And I hope to see everybody on Thursday's call. Greg, I'll give you last word, buddy.
I'm really excited about the show on Thursday. Lee's an incredible asset to this community. I'm excited to see your conversation, Pablo, because I know you love Lee. You're already giggling because you get to talk to Lee. So that's going to be a lot of fun. And there's only one thing that is kind of at the same level of being on the Not Your Average Investor show on Thursdays, and it's playing golf at Pebble Beach, which is where I'm going to be. This is like on my bucket list. Just amazing. So I'm going on vacation. I'm going to go play some golf at Pebble Beach. And, now that Phil Mickelson won the PGA Championship at age 50, as we all saw, I think I've got 12 years left in order to be able to win a major at golf. So I'm starting this week.
Having seen your athleticism, Greg, I believe in it, buddy.
Right.
See you all on Thursday. Thanks again, Jeff.
Everybody.
Bye.